Welcome back to Invest Global. Today we're going to be looking at the disconnect between the economy and the markets. Now, I recently talked about this in a video on August macro outlook, mainly focusing on the global economy, talking about things like crude oil, the US dollar index, the 10-year treasury yield, all indicators that I personally use to basically show you, or at least have a bit of a perspective on, okay, what's the combination of factors that we need to see higher stock market indices? Well, basically what we need is relatively stable 10-year treasury yield. A sign of kind of a collapse, I would say, is a massive spike in the 10-year treasury yield, so T-bills. Beyond that, we need to see higher crude oil and a lower US dollar index, right? So these are all indicators I like to use. Now, some of the other factors that I always think are important to at least take a look at. It is a bit of a lagging indicator, but it shows you what's truly going on is the money velocity. So if we look here at M2, if this is insane, all-time lows, literally all-time lows that we're currently in. Yeah, to new all-time highs, new all-time highs. I mean, like I stated in this video on the macro outlook, it's truly insane what's going on because this massive disconnect. You see these other indicators like people in the U.S. are not happy with what's going on after the pandemic. They're making much less money, yet a lot of corporations are making much more money, right? Because of these bailouts. And we see new all-time highs in the S&P, new all-time highs in the NASDAQ, continue upwards growth right here, right? So these are the moving averages that I personally like to use. Sometimes I like to pull out the Bollinger Bands as well, just as a technical indicator. But I mean, this is insane, right? So holding these two ideas at the same time while not seeing the disconnect is kind of impossible, right? If you know what's going on here, right? So continue upwards growth, just steady growth in this rising wedge, yet all-time lows. So take those two factors into account and understand, okay, you need to really approach the markets with caution right now, in my personal opinion. Be very, very careful with what's going on now. This is not to say that we could not continue to see this growth. Most likely we will continue to see this, right? This is not something that is just going to end abruptly, right? So we will see some other indicators hit, like a spike in the 10-year treasury yield. In my personal opinion, that's most likely what we'll see. We could see a massive drop in crude oil to return back to some of these levels that I think it really should. I mean, crude oil has no business being up here, in my opinion. I think we could easily see a drawback to this 40 level, or even this like 34 level, if we're just looking at it on the technical charts. But fundamentally, I mean, there's really no reason for this price high in oil besides that we see all these other equities spiking, right? So all-time highs with all these things around the board. Be very, very careful in the crypto market. This video is just kind of a word of warning moving into the rest of 2021 and really early 2022. Like I said, yes, we could see a continued growth in this, right? So what I talked about in this previous video was typically what we'll see here with crude oil is something like this. Maybe we'll retrace back down to these levels at some point, retest this mark, maybe break above it, but what you'd want to be looking at for a new high, which, hey, again, we could totally see again if we see more quantitative easing, which most likely we will see, is a retest off of this key level right here, off that 77 mark, and then somewhere moving a bit higher. But more than likely, in my opinion, we will see a retest off this level at some point, especially if we're not too out of the boundaries. But this is it's just the main thing to identify is it's such an artificial situation that we're currently in. It's a very fake environment, if you will. So that's why when you analyze something like money velocity, again, it shows you some of these things very, very well, right? Another thing to look at is industrial trade. So we have this new industrial plan in the U.S., but the actual trade, what's coming out of the U.S. for production, is at lows as well. So these are all things to take into account. Just again, another kind of fair warning of what's going on here with the oil. You can see, and as I said, 10-year treasury yield for this continued growth and these things, we want to see this to be relatively stable. Yes, we can come back and retest. Not really, right? So really what we'd want to see, we're zooming out here, is a relatively steady growth here. When we see drops in the 10-year yield, that kind of shows you what's exactly going on in the market. Again, if we see spikes like this, this to me at least is a bit of a warning sign to, hey, de-risk a bit, right? So we could see some bad things happening. But again, the key thing is to be able to position yourself so you can take advantage of either up or downs in the market, and that's what this channel is all about, Invest Global. So if you have any questions, let me know in the comment section down below. We have a Telegram group for like-minded investors. That's linked down below in the description, as well as Twitter and Instagram at investglobal_IO. That's all for this video. If you enjoyed it, like, subscribe button, all here in Zagreb, Croatia. Beautiful, beautiful, heading to Slovenia tonight. So Invest Global, and until next time.